When we talk about this notion that oil prices had fallen so precipitously, why is it that you feel that you could make a run back towards some of those all-time highs?
Hi, Dom. Good morning. Yeah, interestingly enough, even though we've fallen about 24% over the last 4 out of the 5 sessions, we really have not done all that much technical damage. And you look at longer term charts, keep in mind that crude prices did more than double, just since the early part of December over the last 3 months. So it's really, a new era of volatility, I think, for a lot of investors, but technical trends still very much intact. Momentum is still positive. You look at Elliott wave structure, which is still in very good shape. So yes, a little bit of consolidation, but tough to make too much of this decline. I am betting on oil prices moving back to new highs. And of course, FundStrat's own Tom Lee is still quite optimistic and bullish on energy as well. So, we're big bulls here at FundStrat.
So, Mark, we're showing the chart right now of WTI crude oil futures. We've kind of put this trend line in place, as you can see here, the orange one. And then if you kind of take a look at some of the highs that we've seen across this level here, is there a reason why you feel as though that's going to be strong support at that trend line that we're showing here?
Well, look, Dom, it's held literally over the last couple months. And so normally the first major pullback that you see to an area of trendline support like that typically will offer very good support. My thinking is that it is a little bit short-term oversold, obviously not overall all that overdone. So, it's right to take a stand on this first major pullback and think that we're going to rally up to likely 110, 115, and it might be choppy, but ultimately, I am expecting to see crude prices move back up over recent highs and get up towards 150 at a minimum sometime this year.
All right, not good news for the consumer there. Mark, let's tilt our attention now towards another part of that macro discussion. That's what's happening with interest rates. Big Fed meeting today. There's been an expectation for a while now that the Fed will raise rates. And for that reason, some of the big ETFs that track Treasury bond markets have been trending lower in price over the course of the last several months here. Take us through what the thinking is on what's going to happen with that Treasury complex, that Treasury trade, if you will.
Well, yields have moved up a bit too far too quickly, in my view. And you look at prices of the TLT, we're right back down towards prior lows. So this makes a lot of sense for portfolio managers to consider adding to duration as yields have moved up a little bit over, 2% on the 10-year. Large area of near 40-year resistance for 10-year treasuries up near 2.3. So, this, of course, is the 20-year Treasury bond ETF TLT. And so this is a way for investors to potentially, alleviate some of this concern about equity volatility and taking a look at considering treasuries just at the time as we're heading into this very important Fed meeting, as prices have pulled back near former lows. I think that overhead for yields is going to prove minimal, and it's going to be right to consider buying dips on this recent pullback in bonds.